Well, this year, Canada's housing market has faced the impact of tariffs, ongoing socio-economic challenges, and even saw a new federal leadership. But will 2026 be a reset for the housing market?
Canada's housing market just posted its sixth consecutive monthly decline. November 2025, national benchmark home prices fell 0.9%, now down 3.7% year over year. National average home price dropped to $682,219, down 1.8% from last year. Ontario prices crashed 5.6% annually, one of the steepest declines nationally. Greater Toronto Area average price $1,039,458, down 6.0% year over year. British Columbia benchmark prices fell for the eighth consecutive month, now 5.8% below last year. This isn't a correction anymore. This is Canada's housing bubble deflating in real time. I'm going to break down exactly what's collapsing, why Toronto and Vancouver are leading the crash, how tariff uncertainty is destroying buyer confidence, and what this means for homeowners watching their equity evaporate. Because while real estate agents talk about market normalization, families are trapped in homes worth less than they paid. Subscribe to this channel right now if you want to understand how Canada's $682 billion housing crash is unfolding. March 2025. Single-family home prices in Canada fell 1.7% year over year and are down 16.5% from the peak in February 2022. Toronto area single-family benchmark dropped to 1 in 260 to the 100, the lowest since August 2021. Supply surged to 5.1 months at current sales rates, the highest since May 2019. Let me spell that out. Toronto, Canada's largest housing market, just hit price levels not seen since August 2021. 4 years of price gains erased, and supply hitting 5.1 months means sellers are flooding the market faster than buyers can absorb properties. TD Economics forecasts average home prices will fall 3.2% in 2025, with British Columbia down 4.1% and Ontario crashing 6.4%. The condominium market in the Greater Toronto Area is particularly soft and dragging down provincial averages. Ontario, 6.4%. BC, 4.1%. Those aren't minor adjustments. Those are crash-level declines in Canada's two most expensive provinces. And GTA condos leading the collapse because the speculative investor money that drove pre-construction sales has disappeared. April 2025. KREA downgraded its 2025 forecast by 50,000 home sales, now expecting only 482,673 transactions, virtually unchanged from 2024. Average home price forecast slashed by $30,000, now expecting $687,198 in 2025. CREA, the National Real Estate Association, cutting forecasts by 50,000 sales and $30,000 in average prices. That's the industry's own organization admitting the market is far worse than predicted. CREA's senior economist Sean Cathcart. The only other time it has been this difficult to provide forecast updates was the beginning of the COVID-19 lockdowns. It's been a very big change in a very small amount of time. Read that again. The national real estate economist comparing current market chaos to COVID lockdowns. That's how fast demand evaporated. That's how unpredictable the collapse became. Now let me show you the specific carnage by city. Hamilton-Burlington benchmark price, $776,300 in June, down nearly 9% year over year. Detached homes, down 3.3% to $1,949. Apartments crashed 11.2% to $471,000. Mobile homes plunged 13.6% to $24,000. Hamilton apartments down 11.2% in 1 year. Mobile homes down 13.6%. These aren't luxury properties, these are entry-level housing options for working families, and they're crashing faster than anything else because speculative investors are fleeing. Greater Vancouver average home price, $1,135,575 in November, down 3.2% year over year. Vancouver benchmark declined for 8 consecutive months. Vancouver, the most expensive market in Canada, down 3.2% annually after 8 straight monthly declines. That's $40,000 in lost value on an average home. Homeowners who bought at the peak in 2022 are down over $200,000. Here's what triggered this collapse. TD. Tariff uncertainty muted the market in the first quarter and is unlikely to fade away. Double-digit quarterly decline in sales and mid-single-digit quarterly drop in prices. Much weaker than December forecasts. Trump's tariffs, economic uncertainty, job losses. Families who might have bought homes in spring 2025 are now waiting. Developers who might have launched projects are canceling. Investors who might have bought pre-construction condos are walking away. November 2025, home sales dropped to 40,389 nationally, down 7.6% from last year. Ontario sales crashed to 12,087, down 19.8% month over month. British Columbia sales fell to 5,052, down 20.7% from October and 13.3% year over year. Ontario sales down 19.8% in 1 month. BC sales down 20.7% month over month. These aren't seasonal slowdowns. These are buyers vanishing from the market. Housing starts dropped to 245,800 units in August, down 16% from July. This decline occurred while residential building permits reached a record high of nearly 350,000 units. Developers have permits but are choosing not to build, indicating a demand problem, not a supply constraint. 350,000 building permits, only 245,800 actual starts. The gap between permits and construction has never been wider. Developers have approval to build, they're just not building because nobody's buying. Canada's housing narrative reversed dramatically in 2025. What policymakers described as a critical housing shortage transformed into a measurable surplus. Shortage to surplus. In months. Politicians spent years claiming Canada needed millions of new homes. Now developers can't sell what's already built because prices are too high and buyers can't qualify for mortgages. New home sales in major markets reached record lows while existing home listings surged to record highs. This dual pressure floods the market with supply while demand evaporates. Record low new sales, record high listings. That's the textbook definition of a housing crash. Supply overwhelming demand. Sellers desperate to exit. Buyers waiting for lower prices. Speculative investment demand that drove pre-construction sales disappeared as interest rates normalized and lending standards tightened. Investors who leveraged heavily during the low-rate period cannot or will not complete purchases, leaving developers with unsold inventory. Speculators, investors, house flippers, they drove Canada's housing bubble from 2015-2022, buying pre-construction condos with 5% deposits, planning to sell before completion for 20% gains. That game is over. Interest rates killed it. And now developers are stuck with thousands of unsold units. Meanwhile, end-user demand remains constrained by affordability. At current price levels, typical Canadian households cannot qualify for mortgages or afford monthly payments. Here's the fundamental problem. Prices are down 3.6% depending on the market, but they're still too high for average Canadian families to afford. A 25% down payment on an average Toronto home requires $260,000 in savings. Monthly payments on that mortgage, over $5,000. Who can afford that? Canada's national average home price, $672,784 in July 2025. This price level remains deeply unaffordable for typical Canadian households, explaining why supply cannot find buyers despite record inventory levels. $672,784 average. With median household income around $85,000, that's an 8.1 price-to-income ratio. Historically sustainable ratios are 3.1 to 4.1. Canada's housing is still overvalued by 50 to 100% even after recent declines. RBC forecasts price declines in the latter half of 2025 and into 2026, with Ontario and British Columbia experiencing the steepest drops due to high inventory levels. National Composite Home Price Index expected to rise only 0.7% in 2025, reflecting gains made earlier in the year before the correction began. RBC, one of Canada's largest banks with massive exposure to housing, forecasting continued declines through 2026. When banks predict falling prices, they're not being pessimistic, they're preparing for losses on their mortgage portfolios. Despite collapsing demand, residential construction costs increased 1.0% in Q2 2025, following a 0.9% increase in Q1. Construction costs UP 1%. Home prices down 3.6%. That's the squeeze destroying developers. It costs more to build while homes sell for less. Profit margins collapsing. Projects getting canceled. Bankruptcies coming. With 12,000 unsold units representing 50% above average levels, the market approaches territory where disorderly price declines become possible. If existing inventory cannot clear at current price levels within 12 to 18 months, pressure for significant price reductions will intensify, potentially triggering more rapid market adjustments. 12,000 unsold units, 50% above normal. If those don't sell in 12-18 months, developers will panic. Fire sales, distressed pricing, forced liquidations. That's when orderly correction becomes disorderly crash. CMHC. Overall, our current housing forecast in 2025 is increasingly aligned with the low scenario, which highlights growing downside risks to the outlook. Canadian average home price expected to decline by about 2% in 2025, with larger drops in Ontario and British Columbia. Canada Mortgage and Housing Corporation, the federal housing agency, now aligning with its low scenario. That means worst-case projections are becoming base-case reality. Tariff uncertainty and higher tariffs will drive prices up, while prospect of job losses and rising prices will curb consumption, including home buying. Despite more favorable borrowing costs, home buying won't be spared from this uncertainty. Bank of Canada cut interest rates 7 times. Mortgage rates came down, and housing still collapsed because tariff uncertainty and job loss fears outweighed cheaper borrowing costs. That's how bad economic confidence got. BMO Economics suggested Canada's housing market was looking a lot like the US market before its 2008 crash, with households heavily in debt and speculation playing a big role. Some analysts noted Canada has already seen a far larger evaporation of market value in 2025 compared to 2008-2009. Larger value evaporation than 2008-2009. Canada's housing crash is worse than the US financial crisis in terms of wealth destruction. It's just happening slower, stretched over years instead of months. At least one major bank is providing blanket appraisals to allow purchasers to obtain mortgages based on purchase price, not market price. Despite this, a large number are still walking away and refusing to close. Banks falsifying appraisals to help buyers get mortgages, and buyers still walking away. That's desperation. Banks know if pre-construction sales collapse, developers go bankrupt, and the entire financial system is exposed to losses. Now here's what this means for regular Canadians. You bought a Toronto condo in 2022 for $800,000. Today it's worth $720,000. You're down $80,000 in equity. Your mortgage is $750,000 with 3% down payment. You're underwater, owing more than the property is worth. You're trying to sell a Vancouver house you bought for $1.4 million in 2022. Market price today, $1.26 million. After realtor fees and taxes, you'll net less than your mortgage balance. You can't sell without bringing cash to closing. You signed a pre-construction condo contract in 2021, putting down $50,000 on a $500,000 unit. Completion is 2025. Comparable units are now selling for $420,000. You either complete at $500,000 and lose $80,000 plus your deposit, or you walk away and lose your $50,000 deposit. You're a homeowner with a mortgage renewing in 2025. You qualified at 2.5% in 2020. Renewal rate is 5.5%. Your payment is jumping from $2,800 to $3,900 per month. You can't afford it. You have to sell. But your home is worth less than you paid. Quebec and Newfoundland saw average home prices reach new all-time highs in November 2025, making them the hottest provincial markets. Meanwhile, Quebec and Newfoundland hitting record prices. Because those markets never bubbled like Toronto and Vancouver, buyers fleeing expensive markets are moving to affordable provinces, driving local price increases while national averages fall. Here's the bottom line. Canada's housing market isn't correcting, it's crashing. 6 consecutive monthly benchmark declines. National average down 1.8% year over year. Ontario down 5.6%. BC down 5.8%. Toronto down 6%. Prices back to 2021 levels. 4 years of gains erased. Sales down 7.6% nationally. Ontario down 19.8% month over month. BC down 20.7%. Buyers disappearing. Supply surging to 5.1 months. Unsold inventory 50% above normal. Developers with permits refusing to build because nobody's buying. TD forecasting Ontario prices down 6.4% for full year 2025. RBC predicting continued declines through 2026. CMHC aligning with worst-case scenarios. Banks falsifying appraisals while buyers walk away from contracts. $672,184 national average. Still unaffordable at 8.1 price-to-income ratios when sustainable levels are 3.1 to 4.1, meaning prices need to fall another 50% to reach historical affordability, and tariff uncertainty plus job losses ensuring buyers stay away. This story will define Canadian household wealth for the next decade. Stay tuned.